is my great pleasure to welcome Murilo Ferreira, President and Chief Executive Officer of Vale. It is difficult to overestimate the importance of Vale in the global commodities markets. It is the second largest metals and mining company and one of the largest publicly traded companies with a market capitalization of around $100 billion US. It is the world's largest producer of iron ore and iron ore pellets, and the world's second largest producer of nickel. It is also a highly important producer of manganese, ferroalloys, thermal and coking coal, copper, cobalt, platinum group metals, and fertilizer nutrients, which are important raw materials for the global industrial and food production industries. Iron ore and its markets may not be as glamorous as gold and silver and attract less attention than oil, but as the key raw material to produce steel, it provides the backbone of the industrialized world and the emerging markets. But iron ore prices have fluctuated wildly over the past few years, from $60 per dry metric ton in 2009 to $190 in February 2011. By September 2012, prices were back at below $90 US, only to rise to almost $160 US this February. Our keynote speaker, Murilo Ferreira, has more than 30 years' experience in the mining sector. He is eminently qualified to speak to us about steel consumption and to offer us a deep level of insight into the dynamics driving the market. More importantly, it is the investment decisions that companies like Vale make today that influence prices tomorrow and reflect producers' expectations of demand. Commodities prices have long been seen as a proxy for global economic demand, and so it is a privilege to have Mr. Ferreira with us today. Please join me in welcoming Vale's Chief Executive Officer, Murilo Ferreira, to the AIC.
Thank you. Good morning. Our disclaimer as usual, and we'll see some items of our agenda today. Today I will start my speech by addressing one of the most important values, respect for people. This means putting health and safety first, being environmentally responsible, and supporting the communities where we operate. You see, in this process of our presentation, we have begun to deliver the commitments we have made. We did immense progress was achieved in environment permitting, with more than 100 permits obtained in Brazil. This will allow for the continuation of our operations on a regular basis and the execution of important projects such as Carajás, Cerro Sul, S11D, which will mean an increased supply of iron ore at lower cost and higher quality, the best in the world, creating more value and strengthening our undisputed leadership in the global market. Discipline in capital allocation is highly mandatory, involving the focus on the world-class assets. As a consequence, we will see a smaller portfolio of projects, but with much higher potential to produce higher returns on invested capital. There is a lot of value to be unlocked from existing operations and projects ramping up. The gold streaming transaction is a good example of that. That flows of gold byproduct from our base metal operations had no material value attached to them in the valuation models of most of you. This transaction has unveiled that we have substantial value, about 7.5 billion, according with some estimates. Currently, we have paid $6 billion in dividends, the highest figure in 2012 among the biggest mining company. And for 2013, we announced a proposal to the board of directors to pay a minimum dividend of $4 billion US. Investment reached $17.7 billion, almost $4 billion below the original budget, already reflecting the greater focus on discipline and capital allocation. Moreover, capital expenditures and dividends must be in line with the expected cash flow, with a minimum use of the balance sheet, giving our firm commitment to preserve our credit ratings. Currently, we have several projects in ramp-up. We can say about Salobo, about Vale New Caledonia, and Lubambe. As long as this process advances, variable costs will tend to decrease. Fixed costs are diluted. Thus, there will be a large swing in cash flow of these projects, from negative to strongly positive. Salobo is a copper and gold mining with 2 processing plants, Salobo 1 and 2, and total nominal capacity to produce 200,000 metric tons of copper in concentrates and about 320,000 ounces of gold per year. We have started production at Salobo 1, and the construction of Salobo 2 is underway. Salobo is a world-class asset, and with 1.1 billion tons of 1.1 billion metric tons of proven and probable reserves. And we must talk a little bit about our EBITDA. Excluding pre-operating idling capacity and start expenses and R&D expenses, we reached $613 million US, up 37% from third quarter 2012. This shows that the successful ramp-up of the projects presents a major upside to the current performance. As long as the projects go in more advanced stages of the ramp-up, these variable costs tend to decrease, fixed costs tend to be diluted, and sales and revenues increase. We strongly believe that we are on track to deliver, and some early progress can already be seen in SG&A expenses, which fell by 5% against 2011 and by 31% in the fourth quarter 2012 with compared with fourth quarter 2011. Expenses and behavior of our materials and outsourced service, 2 important costs, dropped roughly $251 million in the last quarter of last year in a quarter-on-quarter basis. R&D expenditures are being focused on fewer projects, and will reduce strongly the number that we have invested in R&D with many less projects. And we must reduce our working capital, and we are working diligently to reach this number, some numbers. We noted some improvement in terms of the divestiture agreements that amount almost $1.5 billion, which mainly included, first, an agreement to sell almost 10 largest carriers for $600 million US, and then chartered them again to Vale under long-term agreements. We sold the Colombian thermal coal assets for $407 million US. We sold our Araucaria, a producer of nitrogen fertilizer, for $234 million. French and Norwegian manganese ferroalloy operations sold for $160 million, and a natural gas concession in the Espírito Santo Basin, Brazil, for $40 million in cash, which also eliminate Vale's commitment to expenditure of almost $8 million through up to the end of 2013. And we did the divestiture of our Kaolin assets. The transaction involving the sale of 25% of the gold byproduct of Salobo for the life of the mining, and 70% of the gold byproduct of Sudbury for the next 20 years will generate $1.9 billion in cash in a very short term. Moreover, we will receive warrants valued at $100 million, and $400 per ounce of gold will be paid to Vale against delivered to our counterpart during the life of the contract. This unlocks part of the substantial value hidden in our base metal assets, demonstrate our firm commitment and capacity to maximize shareholder value on a sustainable basis. This year, there are 4 important projects coming on stream. I'm talking about additional 40 million tons per year of iron ore. The logistics system called 150, the Conceição Itabirites, and the Long Harbor in Canada. They have a large potential to create value over the next few years. And we must believe that this expansion of 40 million tons per year will bring high quality at low cost for Vale and for our customers. You can see some photos of our terminal. What we can say is that we will start this logistics system until the end of this quarter. And in Conceição Itabirites, you see the effects of using the technology to provide a better product and reduce the problems that you are facing in the southeast of Brazil in terms of the quality. But the best is coming. I'm talking about Carajás 11D. Carajás S11D is our major lever for cost reduction, quality improvement, and production capacity growth, and strengthening Vale's undisputed leadership in the global market in terms of quality. The additional 90 million tons per year capacities, operational cost, mining, plant, railway, and port is expected to be extremely low and will create future brownfield expansions opportunities with likewise very low investment cost. We are talking to have this product in our port facility in the range of $15. This is the beginning of the projects, the Carajás S11D. We are working very hard in terms of this logistics to support this new project, the S11D. We got the installer license for this project. We will provide a good foundation for this expansion of to 230 metric tons per year, which will provide an extension of the logistic infrastructure required to support this big project. We are spending just in this logistics system and talking about the railway and the port facility, roughly $11.4 billion US. This is the terminal for iron ore. It's almost there. We intended to celebrate in the opening ceremony shortly. Let's talk a little bit. We don't have a good crystal ball, but let's talk a little bit about the market and a better outlook that you are forecasting. The global IP, the industry and manufacturing, is resuming growth with a positive impact on the demand for minerals and metals. There is a trend reversal in steel production. As well, China's economic recovery is underway, and investment growth went up, propelled by infrastructure and property, strengthening the demand for iron ore. Chinese growth driver is already shifting from investment to consumption. However, demand for investment and infrastructure remaining strong through the decade. The urbanization of China is projected to continue for another 15 to 20 years. Urban population is likely to expand by 300 million to 1 billion people. This is a data that you cannot ignore. To accommodate massive urbanization, large Chinese cities tend to resemble densely populated Asian cities, full of high-rise buildings. And China is estimated to have a rising share of multi-story apartment blocks, with much higher steel consumption per square meter. In addition to the large impact of housing investment, urbanization will continue to produce other important effects on the demand for iron ore. Investment in non-residential floor space, investment in urban infrastructure, increase of passengers' cars. Upgrading of existing poor quality housing and the alleviation of housing shortage are other important sources of growth. China became the world's largest car manufacturer, the most metal-intensive consumer good, but the penetration is still very low. Then we have a long way to see China as a leading in terms of per capita basis. Thank you very much.
We do have time for some questions, so I will go ahead and take some questions and refer them over to Mr. Ferreira. So why don't we get started? There's a question right here.
So I guess in the long term, some of your assets are very high quality and will bring down your average cost per ton. But can you help us understand, over that time period, you're also going to have some mines that are going to be extinguished, right? That are basically going to be mined out. How should we model the cost per ton of these old mines that are kind of getting to the end of their life cycle versus kind of this blended average rate that we tend to talk about?
I think that we are doing a big effort, mainly in the southeast of Brazil, to restore the quality through these projects called Itabirite's project. For sure, it's a big investment. We are spending a lot of money to restore this quality to our customers. But in terms of the cost, the OPEX, if you are talking about the OPEX, it will stay just a little bit above the level that you are facing today. Thank you very much for your question.
Questions? This one right here.
Thank you for a very interesting presentation. I guess just going into the short term a little bit, obviously iron ore's had a very roller coaster ride over the past 12 months. The price went up and now it looks to be coming back down again. Do you think it'll come down much further? And where do you think the price of iron ore will be at the end of this year?
It's not easy, this kind of forecast, because we needed to know about many issues, not just about the demand and supply, but even about the weather in Brazil, in Australia, the problems that we can face in terms of the raining season. But for sure, you are forecasting to have some supply, mainly from Australia, and eventually from our projects, the 40 million tons from Brazil, from the north of Brazil. And I think that in the Vale's Day, in our conference, we forecast in the range of 110 to 140, 145 in terms of the average for this year. Thank you very much for your question.
There's a question over here.
Since a few years ago, the commodity trading companies start to go in other fields. They're going upstream and downstream. They're buying up production companies, but they're also going into kind of logistics, etc. Do you think this is a healthy process, or is the kind of division of labor a more sustainable thing?
Very good question. I think that we must focus in our ability to deliver the best. Vale, as a mining company, we will stay to the iron ore and the copper, nickel, met coal, and fertilizer, and done. We don't want it to go into the whole chain in order to provide new products or in order to absorb part of our cash flow. In case of having further additional cash flow, we wanted to return to our shareholders. I think that it's the best that we can do, is to look for world-class projects. Otherwise, we prefer to return to our shareholders. Thank you very much.
There's a question over here.
Have all the environmental difficulties at S11D now been overcome? So you're quite confident about a second half 16 timeframe for a startup?
I didn't hear well.
He asked.
I'll repeat. The environmental difficulties that you've had at S11D that have caused delays, are you now quite confident that they've been overcome and that you can bring that project through in that 2016 timeframe?
I strongly believe that now you are in the right track in order to get all the permits. In fact, in the past, I used to be in charge of the non-ferrous business at Vale. And at that time, we didn't face the same problems as the iron ore business. We did a big change in terms of management of this area in Vale. We tried to improve the relationship with the government. And I strongly believe that you are doing well. Just to compare, before 2012, in average, we got 20 permits per year in Vale. Last year, it was roughly 100 permits. Then I must stay confident that you are able to deliver everything in 2016, for sure. Thank you for your question.
There's a question over there.
Your iron ore projects would be close to the bottom of the cost curve, and does that mean that you will go ahead with those iron ore expansions regardless of the market price that you see out there for iron ore, because you'd make a profit on those projects anyway?
Our philosophy is to have world-class project. It's very important in a world-class project, the volume, the cost, and the quality. And for sure, we intended to deliver to our customer. What we are facing today is a huge depletion, and we needed to replace the existing volume. And we must replace the quality as well. The future is to grow, but I'm not saying that we will grow regardless of the market. But we are very confident in our growth, because if you are in the first quartile, we must be very confident, and we need to look the future. But we must pay attention to the market for sure.
Question? Right here. Thank you.
In I'd like to know what your projections were of Chinese steel production during sort of a more favorable period. That is, let's say 2009-10, when there was expansion going on in iron ore projects. And now you've given us a story about, yes, increased urbanization and infrastructure projects, demand will continue. But what exactly are your projections for Chinese steel production in 2013, 2014, 2015, and relate those back to production expectations in sort of the more golden years, let's put it that way?
I go straight to the point. I think that we'll see a great market for steel until 2022, 2024. And I believe that China will reach 950, even 1 billion tons per year. I think that, as I said previously in my presentation, we continue very confident about the future of the steel business in China. We don't believe that we will see a consolidation. It's very important for each province to see these steel plants going well and provide good foundation for each province. Thank you very much for your question.
We have a question back there first.
Can you please talk about what is your outlook on potash supply and demand? Thank you.
I think that the future of the potash in terms of the demand, it's bright. We like the potash market. We think that there is room for further demand. Unfortunately, we had problem with the inflation in our project in Argentina, and we are facing big problems in terms of the exchange rate in the cost of the project. Is the main reason because we have decided to give some time in this project and to try to find a partner or eventually to sell the project. But regardless of this, we are very confident about the future of the potash in terms of the demand. The world will demand more and more food, and we need more fertilizer. Thank you very much for your question.
Any more questions? Oh, there's one in the front.
President, could you speak about Vale's cash and cash equivalent management, your cash management, relative to the different currency fluctuations and also your CapEx needs going forward, as well as your thinking potentially to return cash to shareholders?
I think that we must generate much more cash, much more EBITDA in order to convey all our investment. I'm talking about some new investment, and I'm talking about sustaining as well. But we must have enough cash in order to pay taxes and our debt, the service of our debt. I strongly believe that we have a very prudent way in order to manage our cash flow. We will see each project based on this assumption. I think that the number that we have today will provide good flexibility in terms of the future of the company. Thank you very much for your question.
This one right here.
Hi, are you concerned of real estate bubble in China that might eventually burst and affect the demand of iron ore, of Brazilian iron ore and other commodities?
I don't believe that we have a real estate bubble in China. What's happened that we have some surplus in some cities, as Shanghai and Beijing, but I don't believe that we have a real estate bubble. To have a bubble, we must be very leveraged, and I don't think that we can see this scenario in China. We can see some surplus in cities like Beijing, Shanghai, but a lot of things must be done in many cities in the whole country. We strongly believe that we have a good demand in terms of the steel in the near future. Thank you very much for your question.
We'll go here and then we'll go there.
Can you speak more about the potash project in Argentina? There's been reports saying the Argentinian government may revoke the license, and you said just now looking to perhaps sell to the state to a partner. Could you just elaborate a bit more on that? Thank you.
We strongly believe that the law will prevail. The law gives us the right to stay with a permit in our hands for at least 4 years. Then we are very confident in this regard. The problems that you are facing today is very clear, and we tried to reach some agreement with the government for many and many months. In fact, since the beginning of May 2012. Unfortunately, regardless of our effort, and we tried to cooperate, supporting with some alternative, we didn't receive until the end of 2012 any answer about our demand. And our demand, it was precisely because the gap that we have in terms of the investment of the project. The original budget was $5.9 billion, and now you are facing almost $11 billion, which is not reasonable. We must have some discipline, and we will preserve the discipline on behalf of our shareholders. For sure, it's not good to announce that we must stop a project. It's something that it's not good for us, and it's not good for the government of Argentina. But in the end, the law must prevail. Thank you very much for your question.
I think there was a question back here.
Are you still committed to developing a captive dry bulk shipping fleet to hedge freight?
I think that we must invest in our core business. In case of having long-term contracts, we must not have in our portfolio any kind of these ships. But we don't want it to sell for any price. What we wanted to do is to sell for someone, and at the same time to have a long-term agreement, as we did with 10 carriers recently. The purpose of our methodology is not impose some border over our cash flow. Thank you very much.
Any more questions? Okay, thank you very much, and thank you very much, Mr. Ferreira. Thank you.